why do we have a need for private mortgages to begin with? Well, as we saw with that first quote, it makes sense that lenders typically give you money or approve you for money when you don't need it. It makes sense because from their perspective, there's very little risk. If you can show that you have significant income, you have good, stable employment, you have great credit score, you make all your payments on time, then the risk is very low. And that tends to mean that you could go get money pretty much anywhere. And in many cases, you don't need the money. Everything's humming along. When you get into a bind and you need the money, then it becomes a little bit more difficult. So we said we've got OSFI that has increased the constraints for the banks. They have to do more significant underwriting to limit their risk. And that's why we're here. And that's why we've always been here. Because the banking industry isn't able to take really that aggressive a risk because that could destabilize the economy. Me personally, I can take more of a risk and lend somebody some money that the bank wouldn't, because it may destabilize my personal financial institution, my personal financial situation, but it won't destabilize the economy. So there's always a fit and a need for private mortgages. And in many cases, it's to access equity. It's where we talk about second mortgages. So you've built up equity in your property by lowering the amount of your outstanding balance on your mortgage, or watching the value of your property increase, or a combination of the two, which has been what's happened over the last several years. And you need access to that equity. Now, when times are good and you don't really need it, it'd be nice to have, banks are there for you. But when you really need it, then private mortgages and private lenders are here. Also helps with debt consolidation. As we go through the course, we'll talk about some situations where you can consolidate your debt to improve your situation, even if it is on, for example, a high interest rate second mortgage. There are times when you can do an analysis and say to the individual who's borrowing the money, if your concern is cash flow, then a high interest rate second mortgage, combining all of your high interest rate, high payment debts into one mortgage, may lower your payment and increase your cash flow. So depending on the purpose and the need for the funds, there's always a good case to make. When it comes to this, just to be clear, we're always trying to do what's in the best interest of the client, right? So we're not going to put them into a high interest rate second mortgage for a debt consolidation if it worsens their situation by increasing their payment, if their concern is cash flow. Bridge financing is when you're buying and selling a property, and the property that you're purchasing is closing before the property that you're selling, and the property that you're selling, you need the funds for the down payment. So private mortgages can assist in that. Institutional lenders are also there to do short-term financing for that if the borrower qualifies, and if not, then that's where private mortgages can fill that gap as well. Time constraints: in certain situations, mortgages have to be closed quickly, and private mortgages you can close, if everything goes smoothly, within several days. And that is typically much faster than you can get with an institutional transaction. So if you need money fast, for example, somebody's under a power of sale, they're in the process of having to leave their home because they're being evicted, and they want to bring the mortgage into good standing to stop the power of sale process, then you need money fast. and private mortgages can provide that. Then there's also construction. There are certain circumstances when somebody is, for example, building their dream home or building their own home, and they need private financing. Also, when it comes to construction, if you're dealing with a small builder and they're putting up a house. I've got a friend who does cottages in Muskoka. That's an interesting market now, but cottages in Muskoka where he's building a property or tearing down. He's purchased a property, tearing it down and building one for resale. Private mortgages can definitely help in those situations as well.